Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, the 2nd of May, 2019. We're about 3:35 p.m. Central Daylight Time. Wheat had a big rally today. While it was up 8, it was really up even 12 cents. I was surprised at that, to be honest. Corn, I'm expecting that market, we've got rain delays. Now, a rule of thumb, that's all that it is, folks. Do we understand this? Generally, if you don't get the corn in by May 10th planting through the Midwest, you start talking yield reduction. It could be up to 4% as a rule of thumb by May 10th. It doubles itself if it gets to May 20th. It's a rule of thumb. It can be broken. Weather can suddenly improve, whatever. But that is probably what traders are looking at as they're looking at this going on. They're probably also looking at the fact that you're dropping pretty hard on the energy markets all of a sudden. All that bullish talk, and today it was today's the first day where the Iranian waivers really kicked in, where there's no waivers anymore. And instead of having a bullish reaction to the market, I think the marketplace is looking at those EIA numbers that came out the other day. Yesterday, it seems so long ago, and they were just outright bearish. It shows the U.S. is just producing like mad. Now, I decided to put in this low close so you can see it. 814 was the break low way back here last summer. We're now at 830 and a half, so we're back into an area where the market was able to find its footing a year ago. That's all that I'm saying. What is this market doing? Well, it's certainly in a big down thrust, and you can see for the week, you're still down about, 8.5? Well, actually, for the day. For the week, you're down 23 cents. For the day, you're down 8.5. This is what we call a vertical price drop. Trying to catch this, it's like catching a knife as it's falling. It's very, very hard. The market just keeps moving on you. And as you can see on the swing line, you haven't had a higher high day. You got to go all the way back to here, and that's quite a ways ago. And it's also in price at $8.96. 50 cents ago. That's a big move. In looking at how the market's running, you're under the 18-day average in the 100. So we know we have downside bias. So where's that Bollinger Band that often acts as support? Well, when you came out of this sideways action, and I'm sure you can see that that was pretty much sideways, the market went down, and while you first closed under that, remember the rule, 95% of the time you'll stay within the bands. When you do something called running the bands, it's often accompanied by a slow stochastic that embeds. That's one of the elements. Often, doesn't have to be. The second thing is it'll still pay attention to that, but it just doesn't give you a chance on a good bounce. You've had the embedded reading. You know what embedded is. It's when the two numbers that make up a slow stochastic lock in under a 20 level and then start going sideways on you for several days or more. That's often accompanied by the fact that the sellers are waiting to hit the market. In this case, they haven't been able to. I think so. You haven't had that higher high. When I take a look at the meal, it's become the same pattern. You're running the market. You've got the lower highs, lower lows. When it ends, it ends. But until it's over, I don't want to be the bottom picker in it. And in soybean oil, it's very different. Soybean oil, number one, doesn't have an embedded reading. It's bouncing back and forth over the 20 level. Yes, it's running along that Bollinger Band, but it's giving you, if you want to sell, it's giving you opportunities because you're getting bounces. This is a very different looking chart than these right through here, and certainly the soybean itself. When we come to the corn market, we were talking just the other day that the market had these 2 days under the Bollinger Band and then whipped up. And then on this pullback, once you took out this 366 level, I think what you've done is you've caused the shorts from this area now pain, and they're probably coming out of the market. Are we overbought? We are. Do we have to get up to the Bollinger Band? No, you don't. But weather is going to play the key here. I hate being a weatherman, but it's in Chicago area, in the whole Midwest, and I'm sure you see it on the nightly news. We're flooding. We don't stop with the rain. We're setting records in many, many areas, something you've got to keep your eye on. But the market's got an uptrend, upside bias, overbought, and it could target that upper Bollinger Band. In the wheat market, you rallied just enough today to get over this 446 and 3/4 level. negating the downtrend, and more important, you had an embedded reading coming in that you lost. Now, while you haven't hit the 18-day average, I would expect it does get hit in very short order. Doesn't have to, but when you lose an embedded reading, that's typically the case. And the question is, for me, you came out of it by so much, it won't be easy to go right back in and get that reading back tomorrow. And you can only get it back the day after you lose it. In the sugar, this is acting more like a market that has had a fresh breakout of sideways action, riding the Bollinger Band lower. Yes, it's oversold. You'd have to get back over 1275 to negate this downtrend. And from the looks of it, you'd have resistance under that because the 18-day average is currently 1268. It'll drop. So that's the numbers wherever up there that the bears might try to defend it. Obviously, the oversold part isn't the ideal thing, like having an embedded reading with the market. Coffee. Again, it's done it. Every time we try to get up and over that 18-day average, where you would think, well, coffee can't keep going down in price. I've heard that so often. It drops through it. Now, you haven't gone to the lower band, and momentum has flattened out. So the question is, was this a spike low that's going to hold in the market or not? I don't see a trend. I see a higher high, lower low in the market, flat momentum. Cocoa market, you've had this pattern of lower highs, lower lows. The 100-day average has been interesting. Yes, it was exceeded and you went to the Bollinger Bands, but on the way back up and down, you found support at it again. Today, you even tried to challenge that number. 2310 is the number, 2311 is today's low, and you closed back over the 18-day average. Should this market take out 2407, you could end up then with a pattern of higher lows and then higher highs, which would mean the bulls take control of the market. Maybe the upper Bollinger Band comes into play. It's an interesting pattern. In the cotton market, came down pretty hard, but you get bounces along the way, and the 100-day average is now acting as the resistance point. In the Bollinger Band, you were under it today. Yesterday, if we look at the market, you finished 76.71, which was over the lower Bollinger Band. So you don't have succession of that going on. But I did find it interesting that 100-day average, instead of acting as support, is now acting as something of the resistance point. Trend down, some objectives hit on the downside. We'll see what the market can do here. The bears have grabbed control, even in an oversold market. Cattle market, what a washout. You've gone here from this 123 area straight on down 10 cents for all purposes. That's almost, a 9% break in the market? Pretty darn big, and you might even embed. So they've really washed this out. I'll be watching to see if the 18-day average has a bearish crossover on the 100. That would give me an idea of where resistance point, if and when you get a bounce in the market. Feeder cattle have gone straight from 161.40 to 147.70 for all purposes. Wow. And if you didn't just pick a top, how do you get short those markets? That's been the difficult thing. Now, in the hog market, at least we've had a pattern of higher lows, higher highs. It's interesting because a pork load, in fact, 2 big loads that went to China are being refused because they don't have the right labeling. As you know, China's been picking on Canada for holding the Huawei executive, Miss Ming. And it's getting worse, not better. We'll see what happens with all that. But notice where the market basically stopped. How often do I say the market fights battles at the 18-day average? I think that's what you're doing. Want to remind you about my research if you haven't tried it. I'd like to put it in your hands for absolutely free. How do you do this? Well, let me first tell you what my research is all about so that you can work with it. Twice a day, I write market reports, but I start traders off at about 6:15 in the morning recording my first video. My video covers 40 futures markets and typically 5 ETF markets. In it, unlike what I do here, I actually say buy here, sell there, put a stop here, here's your objective, here's what I'm seeing. The reason I'm doing that is I want to act as a buffer to you. You're sitting there, hand on your chin going, should I be a buyer, seller? Maybe I'd like to see what somebody else is thinking about the market. That's the idea behind this. Doesn't mean I'm going to be right, wrong. I will be wrong. I will be right. It's going to be both ways. Nobody walks on water in the game, and nobody's always wrong. Well, most people aren't. In any case, if you like what I do here, how could you not want to try this out? And as I said, it is free. You can either call my staff, they'll get you all set up on it. You're going to get emails. You're going to get a free phone application. If you want to try our charting services, we'll give you free access to that if you haven't tried them before as well. And of course, you can go to our website, www.iraepstein.com. Just click on, as soon as you're on it, you're going to see our carousel of free offers. Sign up. I'm Ira. You have a good day. I'll see you tomorrow.